In today's video, we're going to be talking about should we be selling our stocks right now? Should we be buying more stocks? And exactly what I'm doing when it comes to my portfolio. There's been a wild comeback when it comes to stock market investing this week. And if you guys are brand new to the channel, I help people make money in their investing in the stock market and in real estate. So if you're into that, don't forget to like and subscribe to the channel. So let's jump right into the portfolios right now. And we are sitting at $55,000. This is the most amount of money that I've ever had in the stock market. And if you guys caught my last video, or if you haven't caught my last video, my portfolio was sitting at $52,000. So $3,000 gain. A lot of that mostly came from capital gains, by the way. And if you guys don't know anything about me either, I'm a dividend investor, and this is my annual dividend income. So it increased about by $45 since last week. So I'm sitting at $2,264 for the year. So here's another update when it comes to my entire portfolios. I have a bunch of different brokerages that I've been testing out for you guys just to see if they're any good. So we got Cash App sitting at $57. My Roth IRA is sitting at $12,000. My M1 Finance portfolio sitting at almost $20,000. Robinhood sitting at $21,800, and a Webull account sitting at $1,800. So give it up for the fire trucks that are always in my videos, trying to sneak in, get some recognition from the audience here. And we're gonna wait for them to pass by. So when it comes to my entire portfolio here, we are finally in the green after a massive crash from the pandemic that happened in March. So we're sitting at a 1% gain. My portfolio was down over $10,000 at one point. So that just goes to show you that, consistently investing is the way to go when it comes to the stock market. So that is the overview of the entire portfolio. Let's get down into the nitty-gritty of exactly what I'm buying this week. So jumping into my Robinhood portfolio, this week I invested around $300 into this portfolio, and we are sitting at, again, $21,000. Scrolling down here, you can see that I've just recently added options trading into my portfolio, and I'm specifically doing covered calls to earn extra income every single month. That is something that, I've been trying to do more and more every single week. It's just to earn that extra income, because we need, especially if you're living paycheck to paycheck, you're gonna need that income when your job goes away, or you're not able to work, or something along those lines. So right now I'm almost at $200 every single month when it comes to passive income. I want to get that at least into the $5,000 range. Like, that's a few years down the line, but that is possible, especially at the rate that I'm going. So if this is sounding a little bit confusing to you, you guys might want to watch a few of my older videos, because I explain exactly how I'm doing it. So when it comes to options trading though, this is a little bit newer to me, and I've just started doing this last week. And I have two options right now for Realty Income and for AT&T, and with those I'm able to generate right now about $30 a month in options premiums. So when it comes to options trading and doing covered calls, that is probably one of the safest ways to do options trades. I hear a lot about options trading, and it is very confusing when I first started, and it took me a little bit of time to start learning how to do this, but I truly believe in doing covered calls, and $30 right now for premiums from these two stocks is very low. I've already learned from one mistake that I've done in the last week that I kind of want to update you guys on, is that when you're doing covered calls, you have to do covered calls with stocks that are in the S&P 500, at least in the top 500 or top 250. And when it comes to the stocks and ETFs in this portfolio, when I want to do covered calls like SPHD, AGNC, and PSEC, and when it comes to those stocks and ETFs, there's just not a lot of open interest and volume. So the premiums are very low or non-existent. So my tip for you is just to stick with the bigger companies in the S&P 500, top 500, top 250, and you'll have a lot of more volume and open interest for those stocks. So to summarize all of this option call tips, I'm gonna be able to make around $30 in premiums, at least at minimum, for the next 12 months. So that's an extra about $360. And I think the better I get at it, the more premiums that I might be able to possibly take. So this is something that's going to be ongoing. So follow along if you guys are trying to do covered calls. But it is a lot more capital intensive because you need to own at least 100 shares of the stock that you want to do option trades on. So let's jump into the stocks and ETFs that I'll be buying this week. ExxonMobil, I bought 6 shares. SPHD, I bought just under 1 share. And Apple, I bought 0.043 shares. I invested a total of $305.56, and this increased my annual dividends by about $22. With ExxonMobil, I'm trying to get 100 shares of that company, and the premiums were so much higher than all of the other stocks in my portfolio. So, I'm pretty excited for that, and I can't wait to make those premiums off of that. So before we jump into the M1 Finance portfolio to see exactly what I bought, don't forget to smash the like button for the YouTube algorithm. And if you guys want to view my entire portfolio on M1 Finance, links are going to be in the description. So when it comes to the M1 Finance Wang Gang portfolio, we're sitting under $20,000. And on the day, I'm up about just under 1%. On the week, I'm up 2.6%. On the month, I'm up almost 5%. And this is money weighted returns. But if we look into my holdings, I'm up almost 5%, $1,000 from unrealized gains. And for this week, I invested roughly $700 into the portfolio. And these are the stocks that I purchased. I did the automatic purchase, and I just let M1 Finance do its thing. If you guys want to look a little bit deeper, you can pause the video here to see exactly what I bought this week. So when it comes to this portfolio, the biggest gainers, I'm seeing Visa, Tesla, Lowe's, JP Morgan, and Realty Income. And when it comes to the stocks that I'm down most on, we're going to see AT&T, Consolidated Edison, Verizon, Walgreens, and Altria Group. These companies, I'm just going to be continually dollar cost averaging into them, trying to lower my cost basis. And I recommend you guys do that too, especially if you're down on a stock that you're willing to hold for a long time. So when it comes to the main questions that I've been getting asked a lot is, should we be buying more into this stock market? Should we be selling? Should we be holding? What should we be doing? And for me personally, I'll be holding and continually dollar cost averaging my way into this little run that we're having right now, because honestly, I'm not going to go heavy into any of my stocks right now, but I will be just investing a little bit every single week. The S&P 500 hit $3,000 in the last week, and I believe that all of this good news about the economy reopening, progress with the vaccine is coming in a lot faster. All of that is baked into the price of the stock market right now. Currently, I'm pretty bearish when it comes to the stock market. I see a lot more downside than upside, especially if Q2 earnings comes out and all of these CEOs, all of these companies are starting to complain and say that they're not getting rent, they're not hiring people fast enough, they're not no customers are coming in at all, or something along those lines. Like, we have to really wait to see what they say. Like, only then will I make a decision if I should start investing a lot more cash into my portfolios. And I think that you guys should kind of do the same. But I do believe that if you're just starting out and you're starting out with like a smaller amount of money within like a few $100s every single month, then starting right now is honestly not going to be an issue. Still, I'm investing every single week into the stock market, just not as much as I would like. Like, currently, I could invest a lot more than what I'm doing, but I'm really just dollar cost averaging right now, and I'm in no rush at all. So let's take a look at some of the factors that could bring the stock market a lot further down than it is right now. So right now, I'm at usdebtclock.org. If you guys never seen this website, go check it out, because this is it's pretty intense if you kind of look at all these numbers. The U.S. national debt right now is $25.5 trillion, I believe. Yeah, that's a trillion. I don't even know. I can't even imagine how much money would that fill a room with. Debt per citizen is $77,000. Debt per taxpayer is $205,000. In the short term, this is good because the Fed is really helping out the citizens by giving them a little bit of extra money so they could, start to pay their bills and, wait until we get back on track. But in the long term, this could have a severe consequence a lot of inflation can happen. So it's like if you're holding cash, it's basically there's no reason to hold cash. If they're just going to keep printing money and the national debt is just going to keep rising, that means inflation is going to hit really hard on the US citizens. It's impossible to time the market, so just wait and see what is going to happen. And if you guys want to watch more videos from me, don't forget to check out these older videos here, especially if you're brand new. And don't forget to hit the like button, subscribe, hit the notification, follow me on Instagram, follow me on my second channel. I'll be uploading that later today. And I'll catch you guys in the next video. Thanks for watching. I'll see you guys next week. Bye.